But frankly, I've been doing nothing but computers and banks my entire life. So, yes, it's retail, but it's just another day with banks and computers. We had to come up with new ideas. We had to come up with new products, and people would tell us, go to hell. We don't want them. There's no interest. You can't do that. And I'd sell it, and they'd say, you can do that. Okay, well, okay. The entire purpose for an innovation lab is to take a hard-to-get group of people and to share their expertise within a larger organization. And that's the exact same problem that AI faces. Everything I wrote in Innovation Lab Excellence is valid for AI deployment today. Fundamentally, what Alipay did was to understand the use of big data in credit underwriting. And the credit agencies that we have today are also making big data products already.
I was in Xi'an, China with my wife and my now late father-in-law. We had spent the day before visiting the Army of Terracotta Warriors, one of those world-famous tourist attractions that actually can meet heightened expectations. We were in the lobby of our hotel waiting to be picked up for a tour we were doing that day, using motorbike sidecars to explore the surrounding countryside. And I just read my confirmation email for the first time and seen that it was cash only. I shouldn't have been that surprised because the vast majority of transactions in China were cash at the time. I had to go outside, find the nearest ATM, and withdraw what was a comically large stack of notes. In Hong Kong, where we were living at the time, there were $500 and $1,000 notes, equivalent of 60, 120 US dollars. And so you could get transactions done, even in cash, pretty simply. But that was not the case in China. It was like carrying 2 hamburgers. Luckily, I didn't have to go very far, and the tour was worth it. One of the most fun ways I've explored a country. At about halfway through that trip, we stopped for lunch at a family house up in the hills. My wife dropped her earring in the long drop. Lloyd, the tour guide, had to fish it out while her dad and I drank a beer. But we sat with Lloyd later at lunch. He washed his hands. And and at some point or other, we must have mentioned some of the cycle tours we'd done in the past. Because Lloyd told us about a route he knew from Shanghai that followed, roughly speaking, the old Grand Canal to Suzhou. And we just pinned that bit of information in the back of our minds. Fast forward about 2 years, and those of you who've listened to the show from near the beginning may have already met my friend, Roman Zilbering. I spoke about him in the episode about Moldova. He is a great credit risk strategist, a better friend, but I think he'll be happy to admit, not a natural tourist. So we were quite surprised when one day he asked us if we would organize a cycle tour with him. When he brought this up, we remembered that old story and said, yes, of course, we know a route. I think that was the first time I went to Shanghai, and you can't help but be blown away by the visual impact of modernization and modernization at scale. I had planned the whole route on Google Maps. It was a technology I hadn't had access to when planning previous cycle tours, so I was very happy that this time we wouldn't get lost. Except I'd forgotten that inside the Great Firewall of China, there is no Google. So we had to revert to a paper map anyway. But all that did was underline how quickly this city was growing. In the couple of years since the map maker had been through, big areas of empty land had been turned into homes for millions and millions of people. It was impressive to see, and in the context of the trip, provided a great counterfoil to some of the ancient places we visited over the next few days. But on the financial services side of things, we were still primarily using cash. Fast forward another 2 or 3 years, and I was back in Shanghai, this time speaking at a conference there, and cash was gone. And I'm not just meaning within the hotel complex I could use my international credit card. No, cash was gone. Everybody was using their mobile phones and QR codes. It was change at a pace that few countries can match. Welcome to How to Lend Money to Strangers with Brendan Lagrange. Richard Turrin, fintech, AI, and innovation consultant and best-selling author of Cashless and Innovation Lab Excellence. Welcome to the show.
Thank you so much for having me, Brendan, and everyone out there in podcast and video lands. Thank you for listening in.
Richard, you're currently living across Shanghai and Singapore, working in and reporting on the rapidly evolving financial services landscape there. But your career is properly global, with some names that maybe aren't so familiar, but some names that are really familiar to those of us listening. So let's start there on the beginning of this path to where you are today.
Yeah, it's really funny. So the answer is I was a career banker, and I was the kind of banker who worked with computer programmers and mathematicians. And I was one of those, what do they call them? The propeller heads. I was an engineer studying applied mathematics and derivatives. In the 90s, we're calling all of these technical people. So I kind of laughed because when I was doing the combination of math, computers, and banking, it was called structured products, it was called derivatives. Nobody dreamed of calling it fintech, but it really was because we're using the latest technologies to change how we looked at financial markets. And people will say, well, it was wholesale, not retail. That's very true. But it was still a revolution because we could price bonds that didn't exist. We could look at risk and put prices on it that didn't exist before. And we could use analytical tools straight out of engineering, straight out of physics to develop prices. And mostly it was good, except for when it was really bad with the mortgage market. That's another issue, though.
Yeah.
But that's how I got into fintech.
And so before fintech existed and before data science existed, but essentially doing both of those. And for a key moment of that at IBM. So, we know the old saying that no one's ever been fired for buying IBM. It is this core part of financial services. And I guess data science, analytics, fintech, it's underpinned all of that.
Just to give some background, look, I'm coming to everybody from Shanghai, China, where I live. And I came to China after the global financial crisis. There were simply no jobs for people in structured products and derivatives because that market exploded. And I eventually got a job working for IBM here because they needed someone who understood banking software, and what's going on in the banking community in the United States to bring some of that technology out here to China, where banks were at the time still building core banking systems, core risk management systems. So I worked for IBM for 5 years, right at the point where innovation, fintech exploded. And I happened to be transferred down to Singapore, where I headed their innovation teams, working flat out on IBM's innovation floor. There were lots of different groups in there. And basically what I did was work with bank innovation teams to, get this, work with them with Watson AI.
Yeah.
Now, that's not like it's ancient history, but we're talking about 17 and 18, I think, if my memory serves. Read my LinkedIn profile. Tell me what the days are, right? But the point is, Watson was a great product. Nothing wrong with it. But by comparison to the Gen AI that we're looking at today, Watson was really dumb. But the point was trying to get bank innovation teams who were undergoing digital transformations to understand what the utility of AI was, what the utility of big data was, and how to help them to understand how to use these new resources in banking.
My background's in, I guess, data science before we called it that. And the analytical teams working in the banks with all these sort of tools that became AI and machine learning, we were the ones most familiar with the sort of new technology, but we didn't have a new problem to solve. We just had the one we'd been working on all the time, and we solved it slightly better. We can bring in some unstructured data we couldn't deal with before. We've saved some time, but we were still building credit risk scorecards. And you do need that moment to sit there and say, wait a minute, this technology is not just an evolution of what the predecessors were doing. This can do all sorts of new things. Like, what new problems can it solve?
Absolutely. I apologize if I'm interrupting, but that's the whole thing. So banks had plenty of data, and you had innovation labs, innovation teams coming in, and they're like, well, we can do this, this, and this if we have the data. And the next question is, who knows how to access that data? There were always a bunch of guys in the bank who knew how to get at it, but like you explained, they did it for one purpose. And now they were asked to access this data for all of these new purposes and in new ways. And look, it's wonderful. It's beautiful. It's a revolution. It also stressed a lot of data teams who, had one boss, one master, and then suddenly they had five masters. So, people who knew how to access the data like you and your team became the hottest properties in the bank.
I mean, broad strokes, but your analytical types often don't like change, often like to have sort of a fairly structured world. And suddenly you're saying, hey, we want to do something new and fresh. And there's a process here. You need to think about culture and teams and all sorts. You can't just say, hey, go solve me an entirely new problem. Here's the data and here's a new tool. There's a lot more involved. But I first want to take one little step back because I saw that among your speaking engagements, you've done ones in Mandarin. And I thought, well, maybe you'd studied Mandarin at university and made an intentional move to China. So I was very intrigued there to hear that actually the Chinese move was not particularly planned. So did you pick up your Chinese language skills living in Shanghai and working there, or had you sort of learned the language before?
I had a couple of hundred words. I love languages. I'm a polyglot. I was born in the United States to an Italian family from the north, so you get German, bad German, very good Italian, and obviously native English. From there, you work for a French bank, and then I'm like, okay, China, next, let's put another notch on my linguistic thing. So to answer your question, yes, I learned the majority of it here in China through private lessons and through necessity. And I broke my Mandarin teacher's heart, who is still my Mandarin teacher 12 years later. She's still my teacher. I call her my Mei, little sister, right? Because I've known her so long. But I told her from the beginning, I don't want to learn characters. I have to talk to clients. And I'd give her these big, long sheets of words, servers, data warehouse, and I'd give her all these technical terms and she'd go translate them. And, because I needed it to do it at work. Look, if you make a living over here, and I've been here now for 14 years, you got to do it.
Well, a lot of people, myself included, I also lead on Cantonese, being a little bit harder to learn. But no, I went to 3 lessons and gave up, so it's all my fault. I sat giggling in the back of the class because I didn't know if we were counting or doing colors. I've got such a bad ear for tones. But you're right, it's sort of the right way to approach it, but not, I imagine you'd see, but looking at colleagues around, or not everybody takes the trouble. So great to hear. But sorry, yes, we interrupted the main topic, which were innovation labs. This never-ending debate, do you build or do you buy in the fintech world is, as old as data science and fintech. But an innovation lab, we see it rise and fall in popularity a little bit with the fashions, but working in that sort of capacity at IBM is probably the best place to learn. So you went from having that experience to sharing that knowledge with your first book, Innovation Lab Excellence, Digital Transformation from Within. So do you want to talk a little bit about the book, but also, I guess, more broadly, what you learned building those sort of teams?
There's some little bit of historical perspective. I had always worked, as I mentioned, with computers and banking and money. But the thing was, I was always innovating. I sat on a trading floor. We had to come up with new ideas. We had to come up with new products. And people would tell us, go to hell. We don't want them. There's no interest. You can't do that. And I'd sell it and they'd say, you can do that. Okay, well, okay. So the real motivation for me to write Innovation Lab Excellence is while working for IBM's cognitive studios on the lab floor, my clients were all significantly younger than me. I was already, dare I say, 55, 57. Now that I'm older, my mind is too addled to calculate. But my point is, I was already in my late 50s, all right? And I'm talking to younger people in labs, and they're telling me the same stories that I had 18 years ago with, they don't want my product. They don't believe we can do this. They tell me they support innovation, then they shoot me in the back. Innovation Lab Excellence was really a fast book for me to write. I wish I could write the third book as fast as I wrote that one, because it was the culmination of my career innovating in banks and combined with the stories of the young people who were trying to innovate in banking, and most of them getting shot down, because most institutions, it's not unique to banks, it's universal, will say, innovation is great, we want innovation, and then the next day, or you turn the page and That's too much for today, you know? So that's kind of normal. It's a psychological hang up that people have about accepting innovation. So one of the parts that I talk about a lot in the book, specifically, no bank can hire a full, complete AI team and then take a team, put it in this group, put them over there. No, you're lucky if you can hire a reasonable team, and you have to centrally locate them, and you have to have them as a shared resource, which is exactly what an innovation lab is. Everything I wrote in Innovation Lab Excellence is valid for AI deployment today. You asked a fundamental question, and it was one of the big points in my book, which is buy versus build. And this is the same advice that I would give for an AI team today. You have to buy this technology. All but the very largest global banks like the JP Morgans of the world, only a few of them are able to actually build their own technology. So if you're looking at an innovation program or an AI program, their job is to prove that this stuff can work. All right. Their job is not to deliver ready-to-use code, ready-to-use AI that is ready for production. Because do you really expect them to build their own large language model? And no, they prove it works, and then you need to hire. Particularly for the likes of AI, one of these larger firms is going to come in and hopefully have enough liability insurance so that when your ChatGPT style chatbot comes off the rails and gives somebody the wrong answer, you can blame them with the losses.
Yeah. Offers a new refund policy. I think it was Air Canada got caught out with. But no, I'm so glad you brought that point up, because it definitely changes who should be thinking about innovation labs. I mean, when we look, OpenAI, Google, they're going to be producing something so much faster and cheaper than me. I don't need it. But actually, that's what you need the innovation team for. As you said, it's not to try and outbuild Google. It's to say which of these 2 or 3 very complex tools actually works for us. And as you said, like, there's a flashy front-end sales pitch, but somebody actually should understand how it works, what goes into it, what the constraints are, what the levers are you need to pull. And those people alone are rare. I mean, as soon as you start looking at large language models, neural networks, any of these sort of tools that are out there, even the relatively simpler older ones. I was talking to an AI engineer earlier, and I mean, there's a lot of complicated things he's doing in a model that is essentially drop data in and take data out.
Look at the disaster that Google just had with its Genesis text to image. I mean, they're Google. They're America's premier tech company. And, you know, their images were highly insensitive. Is that the only word I can use? I don't know what
I can get away with that.
Yeah, I think let's just leave it at the images were insensitive. Who checked this spot? Who looked at it and thought that it was okay? That's what you're theoretically paying a big company for if you're a bank or a third party looking to use large language models. But anyway, yeah, buy, please don't build.
Yeah, and as we said, Innovation Lab Excellence, the book, is just as applicable today. Easy to find on Amazon, I'm sure on other places as well. But today, we're going to narrow our focus to your sort of home market and talk a little bit about China. Cashless China's digital currency revolution. It's not all lending. It certainly talks about some topics, though, that are of great interest to people in the field. So what is cashless about? And maybe give us some of the feeling for the market that inspired that book.
Cashless is all about China's transition from a society that was predominantly cash-based to one that was, at least in the major cities, the first through third tier cities of China, by 2018 or so, had all gone effectively cashless, where they were using digital wallets on WeChat Pay and Alipay. It's the story of that transition, and then it's the story of how China has gone beyond that, and it explains what central bank digital currencies are, which is a hot topic right now because we're looking at a digital euro and a digital sterling program. And we all know the United States is dead set against a central bank digital currency. It looks at how they're built, how it will be used, and fundamentally it explains why central bank digital currency is far more than a way to simply buy a cup of coffee. Because most people, if they've had any experience in China, they visualize it perhaps as scanning the QR code and making the payment. and they don't really think about the smart contracts that are associated with it, its ability to work without a signal, without any Wi-Fi, 5G, 4G signal. It can work even with a dead battery in your phone, and how it promotes financial inclusion, particularly in rural villages. That's where cashless goes. But relevant to your audience, I talk a lot about lending, because WeChat Pay and Alipay, once they became the standard, de facto standard for digital payment, and once they had tremendous amounts of personal data, what we would call big data in the West, they predominantly Alipay. I'm going to give it to Alipay. Forgive me, WeChat, or Tencent, the mother company of WeChat. I love you too. But it was predominantly Alipay that really invented big data loan underwriting. And even as of some years ago, they had some 4,000 plus parameters that they would look at from people's use of the Alipay payment app. And they had machine learning models on them to basically underwrite loans. And that's the future. I think it's a great story how they went from a highly successful payment system to going into a highly successful, too successful, that's more to that story later, too successful loan generating platform. And they generated loans with, I wish I remembered the stats, I wrote them down, but when you look at card non-payment in the West versus, Alipay loans, it was like 100 or 1,000 times less default rate. That's how good they are at it.
From the product point of view with Alipay, you have this ability to learn from the customer's transactions, as you said, but also to be the fulfilling agent of the spend. So, we're not just lending somebody some money that they're going to take away and do something with. We are at the transaction end and we can embed it in that genuine super app. They've struggled to recreate those outside of one or two markets around the world. But in the US and the UK, you struggle to create genuine super apps. But those parts of the transaction still exist today, and they're very connectable. You might need to do some nice talking to partners to get access to this stuff, but that environment can be recreated quite closely if there's a will to look at it differently.
Absolutely. So I want to speak directly to everybody out there who thinks, that's China. That's different. We can't do that here. Forget about super apps. Just leave that alone for a moment. They're a great story. I talk about them for hours, but let's leave that aside. Fundamentally, what Alipay did was to understand the use of big data in credit underwriting. And the credit agencies that we have today are also making big data products already. They're gone beyond credit scoring, and they're going into rental agreement scores, which are admittedly by the credit score agencies, not just credit scoring, but use big data to go into, forgive me, are you a bad person? All right. So this exists. Forgive this bit of sarcasm. If the U.S. government can go to data brokers and buy tons of data on individual citizens and then use it, it is not against the law for banks to go out and buy data from data brokers to flesh out a big data profile to enhance their lending activities beyond the credit scores that are currently available. China is not particularly unique in the sense that what they did is perfectly attainable and applicable to the West. Now here, ready? Just to make people call in and say, that guy is really wrong. Ready? China did this stuff a decade before the West. They've been on this since 2014, all right? They've got years now at looking at big data, instant payment, immediate loans. They are really good at it. And rather than say that China isn't relevant, you should be looking at what China has done, because that is like a crystal ball into the West's future.
Open banking is the one big easy channel to use to get a big chunk of this, but you can go beyond with the right consents and just some transparency. And you may say, well, we'll stop short of where China goes, but the point is to explore those same ideas. And the one I keep talking to people about is, if I use Apple Pay, that transaction goes through my credit card back into the normal system. It doesn't really change things. Whereas if I'm using a WeChat Pay QR code, It's not going through my bank. Now, when we think about this Western model that's heavily credit bureau based, take some rough numbers. Generally speaking, about 85% of people on the credit bureau have never missed a payment on something. They're all our good customers. And the way we can create nuance between them is I can see which of these customers has spent $10,000 every month and repaid it for 20 years, and which of these customers has spent $1,000 once or twice. And I can say, okay, I'm more or less confident based on this. But that 85%, 90% of people, if their spend went away from credit cards, the majority of them are not using that credit card for credit. It's just a spending tool. They're repaying every month. There's an easy world to see where suddenly 80 or 90% of their data doesn't go to the credit bureau anymore. And then what do you do with your FICO scores? If you're not thinking about where you're going there, if you think, oh, this is just for first-time borrowers, you could find yourself in a lot of trouble very quickly, because this sort of switch can happen really quickly if someone does it right.
Look, China has credit rating bureaus as well. They are far underdeveloped. They were, in 2014, far underdeveloped. In fact, in my book, I talk about how they only had credit scores for a small percentage of the country because, frankly, their credit score model was based on credit cards, and most of the population was poor, and most of the population never got a credit card. So they only had credit information on essentially a wealthy group that had. But we are now looking at account-to-account payments through the United States FedNow. UK has had A2A payments for years. We can integrate payment data right into the credit systems. That's absolutely doable. So, truth bomb, your credit cards and what we call credit card rails, meaning the systems that carry the payments. And you accurately talk about how when you use Google Pay, Apple Pay, these are not digital payment wallets along the lines of WeChat Pay or Alipay. Forget about the super app part. They basically repackage your credit card in digital form on your phone. So you're still using credit card systems, and credit card systems still charge merchants in the United States around 3.25+%. I don't remember exactly. So we're paying these huge amounts in credit card fees, and we're maintaining a system that has been leapfrogged and surpassed by real-time payments all throughout Asia. And that includes Australia, Singapore, China, India, with its fantastic UPI interface. We're sitting here with credit cards. Yeah, they were great technology in 1990, 1968, whenever. But the point is, we never evolved beyond them, and that's a real problem. But certainly, we could change or modify how credit ratings work in the West to accommodate account-to-account real-time payments. In fact, they're doing it for FedNow in the United States because FedNow, sadly, requires a bank account to use. So the banks are kicking in the FedNow payment data up to the credit rating agency. So they have a process that's essentially unchanged than what they've got now. But A2A payments in China, in UPI in India, they are essentially free or very near free, and they do not, under all circumstances, require a bank account, which brings financial inclusion to an entire new group of people. Anyway, I think I digress.
No, I mean, I think it's very, very, very valid for the conversation. One last thing I wanted to cover, though, while I've got the advantage of having you here, is if we look at the Western world, the big development over the last sort of 5 years or so has been the sudden rise and drop back again of buy now, pay later. If buy now, pay later was being built in China, or if the same problem perhaps was going to be solved in China, how would that maybe look different about that setup?
So buy now, pay later does exist, but it's a minor share of the loan market. Whether you like or want to use WeChat Pay or Alipay credit systems, they provide you with a point. Here's a price. Here's a data point. I know what Alipay will charge me for this money, and I know what WeChat will pay me for this money. Credit card utilization rates in China, which were high interest loans, just like they are in the West, collapsed overnight because everybody cleared off their credit card balances and probably paid them off with WeChat and Alipay loans that they were paying much less at. You see, I look at BNPL as a highly defective and regressive product. There's nothing new about BNPL. It is simply a throwback to 1920 installment payments that you had at the company store. It's not exactly new. Lending has to go in the direction of we know more about you so that we determine whether you are worthy of credit or not and what that credit should cost versus, okay, everybody gets it and we know nothing about you. And really, BNPL's success is really based in part on regulatory arbitrage. Nobody knew how to regulate the stuff, so it took off. But I was prepared for this question, and I want you to listen to this because I cut this out special for today, and these numbers I am sure of because I will read them. This is the latest stats out of the United States regarding BNPL U.S. market. Ready? 56% of people who used BNPL encountered at least one problem while using the service. Overspending, 29%. Missing a payment, 18%. Difficulty returning products and getting a refund, 18%. BNPL isn't free because they're nice guys. They want you not to pay so they can make money on you. And then the users of BNPL are our financially most vulnerable group and are predominantly undereducated. We want people to thrive in society, and BNPL is not really the way to go. I mean, yes, I know it's successful. That doesn't mean I have to like it. It is the opposite of knowing about your customer, and we have that ability to know about our customers, and we should be using it.
One of the things to think about in the lending world about this knowing is the time scale as well. Like the old model of lending was that I'm deciding today, and I'm assuming I'm not going to revisit this for 6 months minimum. So I'm going to take what I know today and give you a credit limit. And you know, it's such a weird lever to be pulling these days to just have this big clunky stick to beat people with. Somebody needs to be coming out with something that adapts a little bit better, that moves with people. There's a lot of ways to break this down that fit better if we forget everything about the system that's been built today. And one way to do that is be inspired by other markets who've done it differently.
I couldn't agree more. And I want to grab onto something that you said. And that was paraphrasing, if we are not stuck on the system that we built today. When I look at credit and payments in the West and I compare them with credit and payments in China, and not just China, I'll go to India. Look, folks, and I'm going to say this once, just really quickly. It's divergent. Central bank digital currency. China and India are both going to have them in the next year or so. 35% of the global population will have access to a central bank digital currency, meaning it's not unusual. And I grant they have new technology and they are not restrained by traditional lines of thought. And because they are unconstrained, because they have access to data, and I won't even say better data, but they are free of how they think. And don't be thinking that China or India, the other example, are unregulated. Oh, their regulations don't care about personal data, or they allow for free use of this stuff. Are you kidding me? China has more severe data regulations than anybody on the planet. India has severe data regulations. That's why they're dragging in Google and other big techs into the court system. So it's not because they are somehow lawless third world countries. It's because they have adopted a different way of perceiving and understanding. And we are sort of blocked in cement, and that is a fundamental problem in why we are falling behind.
There's so many more things that you speak about and write about, Richard. So I know you've got a website, richardturrin.com with 2 R's. But if people want to benefit from this sort of years of insight you've got in the region, want to read your works, read some of your other posts, where should they go to connect with you to learn more about the work you're doing?
Sure, no problem. Look, to anybody out there who severely disagrees with anything I say, write me. I write everybody. You know, I'm happy. I'm on social. So here's how to get in touch with me. My best writing of all is on Substack. If you're a fan of Substack, I have a weekly newsletter, but I actually write daily on Substack. So richturrin.substack.com, 2 R's in the name Turrin. I'm on LinkedIn. I'm on Twitter. Send me a message on any one of those platforms. I'm proud to say I'm the number 4 global fintech influencer on the Analytica ranking system. So reach out to me, LinkedIn, Twitter, and Substack. My books are all on Amazon, Kobo, and a number of other places. And if you disagree, tell me why I'm wrong, and that's fine. And if you agree with me and you thought I was a nice guy, please write me and tell me I'm a nice guy. I love those letters even more, I have to say. But I pride myself. I'm on social media, and it's a zoo. People are not pleasant anymore, but I pride myself in running absolutely clean, pleasant, and above board discussions that are kind to everyone, even those I disagree with.
Yeah, and of course, I mean, there's a flavor of politics that's going to come into any West versus East sort of discussion, and there's nuance that gets in there. But I think whether people agree that the Chinese model is the way to go or not, the fact is it's working really well in many situations. Even if you're not saying, well, we're going to bring it all over, you can't help but learn something.
Thank you so much for that, because that is really the point I try so hard to make in my book. And it's no surprise, China-US, China-West relationships have plummeted. But the reality is, number one, just because I live in China doesn't mean I've turned into a communist. I get that question from time to time. So please, I'm a hardcore banker for 18 years, and that hasn't changed. But the concept that, what happens is China is not applicable to the West, that is a fundamental error. They've tackled fundamental problems that we can expect to have sometime in our own futures. So there's a lot there to learn from, and a lot there that, again, works like a crystal ball to our future.
There's certainly things to be fixed. Certainly, if you're looking to fix, if you're looking to think differently, why not look at a big alternative? So the show itself is audio, so not everyone will see the pictures, but with the backdrop of Shanghai behind you is one of my favorite images of modern China, because it is so clearly a big growth, innovative space. And it's been a while since I visited, but anybody who goes there once will see, okay, there's stuff happening here that is worth considering. So thank you so much for your time.
Brendan, thank you so much for having me. Thank you to everybody for listening in.
And thank you all for listening. Please do look for and follow the show on your favorite podcast platform, and share the updates widely on LinkedIn, where lending nerds are found in our largest concentration. Plus, send me a connection request while you're there. This show is written and recorded by myself, Brendan LaGrange, in Brighton, England. Show music is by I Am Wake, and you can find show notes and written transcripts at www.howtolendmoneytostrangers.show. And I'll see you again next Thursday.